Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 6th, 2025, and we're diving into Equitable Holdings' second quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Equitable Holdings has released their Q2 2025 results, and there's a lot to unpack, from strategic transactions to financial performance metrics.
Revenue and profitability overview. Let's start with the financials. Equitable Holdings reported a net loss of $349 million for Q2 2025. However, their adjusted EPS came in at $1.41, beating the forecast of $1.28. John, what does this tell us about their performance?
Despite the net loss, the adjusted EPS beating expectations is a positive sign. It indicates that the core operations are performing better than anticipated, especially when adjusted for notable items. The non-GAAP operating earnings of $447 million also highlight the underlying strength in their business segments.
How does this compare to last year's performance?
Last year, they had a net income of $428 million, so the swing to a net loss is significant. However, the adjusted figures show resilience, particularly in their strategic areas like retirement and wealth management.
Strategic initiatives and transactions. Equitable Holdings has been active on the strategic front, closing a reinsurance transaction with RGA. Can you elaborate on this, John?
Absolutely. The reinsurance transaction with RGA generated over $2 billion in value and significantly reduced their mortality exposure by 75%. This move not only strengthens their balance sheet, but also allows them to focus on core growth areas like retirement and wealth management.
And how does this impact their financial stability?
Their NAIC-RBC ratio is now over 500%, which is a strong indicator of financial health. Additionally, they returned $318 million to shareholders, which is above their payout ratio target, showcasing their commitment to delivering shareholder value.
Business segment performance. Let's delve into the performance of their business segments. What are the highlights, John?
In the retirement segment, they reported net inflows of $1.9 billion, which is a strong performance. Wealth management also saw advisory net inflows of $2.0 billion, reflecting robust growth. However, asset management experienced net outflows of $4.8 billion, primarily due to market volatility in April.
And what about protection solutions?
Protection Solutions reported a loss of $58 million, mainly due to elevated mortality claims. This segment faced challenges, but the company is addressing these issues through strategic initiatives like the reinsurance transaction.
Future outlook and CEO statements. Looking ahead, what can we expect from Equitable Holdings?
CEO Mark Pearson expressed confidence in their growth momentum, expecting EPS growth to accelerate in the second half of 2025. They are on track to achieve their 2027 targets, including $2 billion in annual cash generation and a 12 to 15% EPS growth CAGR.
That's quite ambitious. How does the CEO view their strategic position?
Mr. Pearson highlighted the benefits of their integrated business model and strategic milestones like the reinsurance transaction. He believes these will drive significant shareholder value and support their long-term financial targets.
Key takeaways. In summary, Equitable Holdings has shown resilience despite a challenging quarter. Their strategic initiatives and strong segment performances, particularly in retirement and wealth management, position them well for future growth. Thank you for joining us, John.
Thank you. It's been a pleasure discussing Equitable Holdings' performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Equitable Holdings' performance in the comments below.